Hi, good afternoon to you guys, everyone. Thank you very much for staying back to this session with me on applying price psychology to market trends. So I'm going to take this more like a sharing session today on how I look at STI. A brief history about myself. I've been trading FX, and my main reliance is on technical analysis. So I'm going to go through some charts with you on how I break it down from different asset classes, such as the STI, Dow Jones, or a bit on euro dollars, as well as some commodities. So the main reliance, as the title explains, price psychology. What we want to do is to understand the foundation, the basis of technical analysis. And then from here, we can better understand how the price works for us to perhaps predict and forecast where would be the turning points and how do we continue the trend trading actions. So without further ado, let's proceed. This is just the standard disclaimer. And then I'll move on. Okay, the content for today, a little exciting, I should say, at the ending part, whereby we'll be bringing in a short introduction of our new launch of trading platform by CIMB Securities. So this platform has been much invested into, whereby it's state-of-the-art, lots of sophisticated and advanced technology, charting tools, and things that are so-called the first in the industry, and I'll explain the features later on. And on my content, what I'm going to go through today would be a brief analysis on STI, a little on the global economy and how we can use these pointers to give us a feel about how the situation is moving for us to say, from the point of STI at this point of level, maybe say 3,200 plus, where would we be heading? Most probably up, sideways, or downwards. And then on price psychology, how we can apply to the various charts, and then using technical tools to further filter down and see how we can better optimize them to give us the utmost accuracy. So in general, briefly on market trend, there are basically three types, according to textbooks, I should say. So the major trends, taking months to years to formulate. The secondary trend, couple of weeks to couple of months. And of course, the minor trend, last of all, the intraday trend, whereby we see most of the scalpers into action. So most of which relies on different time horizons. So as an investor or a trader, you should know, or you should first ask yourself, before I place an investment or a trade, what is my duration of holding? What is my time horizon? So from here, I would know what is the cycle that I'm targeting into, whether is it the major trend, the secondary trend, or the minor trend, or even intraday. And from there, what is the respective time frame I should look into? Because it's not everything that is just daily chart. It could be maybe 4 hourly, or even weekly. So trend is in simplicity. In the bullish assumption, we go for higher highs and higher lows. And what we want to see, preferably, would be more large-size bullish candles. And the larger size candles are what we call decisive candles. So it means that biasness is towards a one-sided game whereby everyone is just buying up, overcoming or overwhelming all the sellers in the market. So it's one-directional. And you can see that with the large chunks of greenish candlesticks. So, sorry, it might be a bit small over here, but I'll just try to narrate this over. From the start, we have January 1988. And over a span of 8 years, approximately, to February 1996, this is the bullish run that we had. The bull run, over 8 years, circular run, circular trend. And then comes the crisis on February 1996 to September 1998, approximately 3 years of drop. Okay? So next, we have September 1998 all the way up to January 2000, just about 1 year plus, and we see a strong rally up there. Subsequently, another 3 years downwards. And then from 2003 to 2007, 5 years up. The most recent crisis that we faced takes us down very quickly, approximately a year, from 2007 to March 2009. And from then till date, it has already been 5 years. So what I'm trying to say through this chart is that we understand from the flow of how the bullish and bearish momentum works. The most of the time, the bullish rally takes an average about 3 to 5 years to materialize, longer period. Whereas for the bearish trend, downwards fall, generally quicker. about, let's say, 2 years on average. So considering the fact that STI is where we are now, and it has already been 5 years, most of the time bullish rally moves up very quickly. In the first 3 years, from March 2009, do you see the first peak over there? That is approximately 3.5 years' time. So we have been in consolidation around 1.5 years. So where would we go next, given the current situation in the global economy? So that brings us to the next chart, whereby, first of all, I'll talk about Eurozone. This is just in summary, not too much in detail, but this statistics, as you can see, I stated the source over here. If you're interested, you can visit www.tradingeconomics.com, whereby you can get data from all sorts of countries that you wish, all sorts of data, CPI, etc., etc. So, right now, Greece is facing 26.4% unemployment rate, which is increasing based on the recent release. Spain, 26.3%, Portugal, 17.5%, and Cyprus, 14%. This is before the tax issue. So from the chart itself, you can see since 2011 to date, we have been seeing progressively increase in unemployment rates. This is based on the whole of Eurozone. So since 2011, start from 9.9 unemployment rate to date of about 12%. So it's hitting new highs again. And whereas for GDP growth on an annual basis, from 2011, we can see that it's positive 2.4, and it has been gradually decreasing to date. And right now, it's already in the negative region, and it's increasing from there as well. So situation over here, a bit bleak. On the US economy, we can see that unemployment rate has been decreasing, which is a positive sign, and that has been quite steady of recent. And there's also GDP growth, though erratic, but at least they are growing. So this puts some hope in the economy. On the United Kingdom, decreasing unemployment rate, but GDP, you can see that it's very erratic in the sense that there's positive growth, but yet it falls into the negative region very quickly. And you can see that of recent, in the end of 2009, we can see a spike of about 0.9 in comparison to the previous years. So I'll explain just a little later on. And China, just in general Asia, most of the Asian countries, especially Singapore, which I did not illustrate, but I've looked through it, unemployment rate has maintained low, if not better. And there's also slight pickup on growth GDP annual basis. So this puts us in a good front for the Asian economies. So in summary, what we see over here is that the US, as mentioned, due to the unemployment rate and modest growth in GDP, we see that it's a positive note in the market. Eurozone, quite bleak, bearish sentiment has been growing, considering the recent issues from Cyprus and Portugal. And especially yesterday, where Greece had actually released their unemployment rate data higher than expected as well. So UK economy, decreasing unemployment rate, growth is unclear. And what I suspect that the recent spike based on a 0.9 on the end 2012 would be mostly due to the Olympic Games, whereby we see a lot of consumerism, etc. But this one-off spike, can it be sustained? And what is the thing that you're doing? It's a bit unlike the Eurozone, whereby you can see that different factions, different countries formulate into the Eurozone, and they are using a singular country. But we have to understand that for the Eurozone countries, both of them grow at different paces. So, based on that, can they easily so-called devalue their currency just to accommodate the weaker ones in consideration of controlling inflation as well? Or could they do some of the means like adjustment of interest rates freely, and how will it impact the different countries since they are of different growth and of different needs? So on US, UK, I would say that they are able to make this decision freely because they do not have to be responsible to maybe another consolidated partner. So on that front, should they want to grow the economy, etc., they are easily doing easy measures, adjustments of interest rates to stimulate exports. These are much available without much restrictions. So these two countries, I would say that self-sustainable based on these adjustments. Asia, of course, the strongest of the all. Majority of countries are having very healthy unemployment rates and, of course, healthy growth. and then they are able to maintain its own currency and interest rates to sustain growth, pillar of the global economy. This is at this rate. So, considering the points that we went through based on a summary of the global economy and on current, this is the STI daily chart. I've placed in from the previous high to the low on Fibonacci retracement. Right now, what we're looking at is the 76.4 Fibonacci retracement level, and that is approximately at 3,330. So we can see that of recent data, in the past couple of weeks to months, we can see that they have tried to test approximately this level, but they have never succeeded to formulate a breakthrough. So I wouldn't say that this is a bearish line at this moment. I would just say that it's trading in a band at this moment. You can actually see the resistance and support level. I've drawn the support resistance. We can just take it as the Fibonacci level. And based on this, I would say that we are expecting a much longer consolidation, considering that we have good data from Asia side and a bit of negative data from the Eurozone. So this puts us maybe more towards the sideways movement at this rate. And we'll see how it goes based on, let's say, the price action. You can always tune to a larger time frame and using technical analysis to formulate or give you a better feel of where the chart will go to next. So I'm going to just share a little on this, whereby we talk about price action. In general, keeping demand and supply in mind. So in simplicity, if demand and supply is the same, assuming we take in relation to a stock, opening price at $1, buying and selling pressure the same, at the end of the day, it still closes at $1. So the candlestick doesn't move. Same thing. If buying surpasses supply, meaning buying exceeds selling, then definitely the price will keep moving up. And then vice versa. So each transaction is determined if the price will move up, move down, or stay the same. Since majority of the professional investors or traders look at candlesticks, especially on its closing price, we will place our emphasis on the candlestick's closing price and its body. So that lets us move on from here. So what I'm going to show you in particular today would be this single candle pattern. It's a reversal candle. And this actually gives a good summary of the demand and supply theory. And this is how you can actually make use of this concept in terms of when your prices that you are tracking, let's say euro, dollar, or any other asset classes, reaches a particular support or resistance of your interest. This is when you want to pull out price psychology or price action to determine if you're willing to take the trade or not. So I'll be using a bullish example on this. Let's refer to the first candlestick. When trading starts, price move bearishly downwards, assuming one line. I'll move on to this chart. Okay. At the start, we start with one line, just a horizontal line across. This is just to state that this is the opening price. So the next candle shows you that during the intraday trading, the price actually moves down decisively. A little while later, move down much more. And we can see that by the longest red candlestick. But towards the closing price, buyers actually came back to the market and pushed the price back up again before closing. That's when we have a shorter candle, red candle there with a tail. And then towards closing, or maybe even the close, we can see that the opening price and the current closing price actually retraces almost to the same level, which means halfway through intraday trading, buyers actually aggressively buy up again. Could be various reasons. Maybe it's a technical rebound. Maybe it's cheap enough that people want to accumulate at the point. So from here, there's a lot of guesses, but what we can do is to use technical analysis, maybe your support resistance, or even other indicators to justify that perhaps this is the level. And based on this psychology, it's all about price action. And this is how we want to make use of this to increase our odds of getting the decision right on our trades. So there are various patterns that we look into. We have engulfing pattern, bullish pattern, piercing, etc., etc. So I will not go too much in detail on this. We'll be sharing this separately in CIMB's education coursework, which is free catered to our clients. So this is made available free of charge to account holders, which we have a structured curriculum going on from the basic level all the way to the advanced stages with trading strategies in place. Just to take note that keep a look on all this in the peaks and bottoms, and you can see that they are actually quite frequent in terms of the occurrence. So, okay, I'm going to have a euro-dollar chart here. you can see that the boxes highlighted. Coincidentally, you see that what we went through on the previous slides over here, all these reversal patterns, actually do occur at the tops and bottoms. And this is on Dow Jones Index. The STI, as well as gold. So it applies to any asset classes that you're trading, any instruments. So, right here, just to be honest with you, I did cherry pick on certain so-called tops and bottoms that actually worked. But on the next slide, the circled ones are those that did not work. Next question in mind is, since there are equal chances of it working and not working, what is the next step we can do to avoid making mistakes, to pick the wrong ones? This is on the STI, circled ones, the wrong ones as well. That's when we look into using technical tools to further filter out the noises. So, these are the various so-called technical tools you can use in combination or singular. That's fine as long as you understand its usage. And of course, the important note below is use the right tool for the right purpose. It is not one size fits all. So it doesn't mean that, let's say, if you're familiar with MACD, you should stick to the conventional default setting. Just feel free to try around adjusting the parameters till the day that you can accurately pick the turning points, and then you can use it as a reliable signal for yourself. So this is what I want to show you. We have on the right side the boxes and circle as per the previous chart illustrated over here. So it's exactly the same chart, just I'm showing the further periods on the back. We have over here two MACDs. One is a standard, one is a customized one. And you can see that on the red circled ones, the MACD is obviously turning down, and between the signal line from each other, it's actually quite far apart, gradually moving away, converging from each other. So would you actually place a long trade over here where the technical tools are telling you otherwise? So this is one way to avoid. When you can see that obviously it's scaling downwards on your indicator, you would actually take more caution into so-called counter-trading the trend over here. And then the blue ones, you can see that it's in line with whatever the technical tools are referring to. So in general over here, let's say if you know that you have customized your indicator such that it's able to track the trend very nicely, the tops and bottom very nicely. So each time, let's say, assuming that we are in a bullish movement at this moment, the MACD is fanning upwards very nicely. Would you be putting risk to short the market at this point? Unlikely. So what you'll be looking for is when the market actually did make a correction downwards, you will be aiming for the time that you want to pick up more to continue the bullish movement upwards. So these are the various techniques that we can utilize. And this will be taught subsequently through our education coursework as well. The next thing that a lot of retail investors, or should I say even some traders did, is that they would like to use the very so-called commonly used technical tools, traditional methods, the 50, 100, 200 SMA. I'm not trying to say that this is wrong, but you need to understand how it can be implied and its usage. How is it that it can be projected into a chart to make it useful for you to generate better trade ideas? So, if based on 3 lines at these crosses here and crosses there over here, does it really give you a reliable signal on time to justify your trading decision? Or is it good enough to properly track the trend of where the price is moving towards to? So just keep this in mind. Next is that I've put in, this is just for your consideration, SMA 13 and 34. 2 lines. Very simply, whenever there's a cross over here, it's not just to say that we straight take a buy order. What this does is it tracks the trend for you in terms of intermediate or even to the micro. So when the two lines are expanding just over across, you can see that the bullish momentum is strong. But to the extent that when the two lines starts to converge together, it means that there could be a possible consolidation. It's not to say a reversal. So during consolidation, what is the technique do you use to trade the consolidation phase? What is the technique you use, or the tools you use to trade during trending period? So these are the key considerations that you should have in mind to use the right tools for the right situation. Okay, so I just listed the one example on the stochastics using 833. This is what I use in general to trade the consolidation band. You can see that the band actually starts to tighten over here. SMA crosses each other numerously over this horizontal trading period. And then you have the purple lines, the first two, taking the top, so-called first trade, buy, sell, and then sell, buy. Subsequent over here, same thing, when it's in consolidation, these are the tools that we utilize. So this is stochastics for its rightful purpose during consolidation trading. So trend trading, we have other methods as well. Okay, without further ado, I want to just share with you that we have a new system launched recently. Invested heavily on this state-of-the-art equipment, and we have a lot of features that are first in the industry, and just want to share this good news with you guys. Two systems over here. What we have is called the iTrade and iTrade Pro. iTrade is a very minimalistic, simple, but solid platform that you are able to use with numerous features that are user-friendly. So this platform, the main purpose is to give you an all-in-one interface, whereby you can go through the tab. You can see that on the top, I have the code screen over here, whereby you can have your normal so-called STI stock components for you to go through on a daily basis, sorted by volume or gainers, etc., etc. But refer to the different tabs over here. I can just tap around very quickly. Singapore stocks, various watch lists that I can configure, and all of them can be put into tabs over here. You can see this fundamental, Thomson Reuters. We have news. Your order pad is immediately available. When you want to put through a trade, just double click on anything over here, stock of your choice. Market depth is immediately reflected live. Put in the quantity, and then you're good to trigger. Very easy to use, simple. And then you can see that this will be enabled for various exchanges. So this system is not usable just for STI. If you are interested to trade Thailand, Malaysia, US, etc., you can actually do this sorting over here. And then lots of features up there, very good to use. Next tab over here I want to share with you is this fundamental. You can see that I actually played around with the different tabs. The panels over here actually changes based on my preference. This gives you a breakdown in terms of financial report of the company that you're looking for. So you do not have to maybe say buy a specific report from any broking house, etc. All these are made available free of charge. Daily news updates. So you have to subscribe to perhaps those news service provider that you need to pay on a monthly basis just to get updated news. This is provided to you free of charge. Streaming while you're trading. You can even set alerts on it. Okay, now to the iTrade Pro interface. This is what we have for sophisticated traders. So if you think that you are professional level, or let's say a retail level that is savvy with a lot of knowledge in technical analysis, and you like fast-speed trading, etc., this is what we have for you. Lots of advanced technical tools that you can utilize free of charge, and you're able to customize even for algorithm trading. So just a few key points that I want to share with you guys. What CIMB Securities have right now for both platforms would be co-location with SGX. What this means is that our servers are placed directly beside SGX, and your orders are executed at the minimum time possible. Which means, let's say, if you have a friend who is trading beside you and is holding a non-CIMB account, and you are actually holding one, using either the iTrade or iTrade Pro, when you guys key in order at the same time, do not be surprised that your order gets triggered much earlier. This is tested and proven before we had to shout about this. So right now, CIMB is the only one with this feature, co-location service with SGX. And both platforms are definitely easy to use, customizable with a lot of advanced feature of your choice. So what we have over here would be main idea to be easy to use, convenience, usability to traders, because this is what it's all about. So you need to have on-chart trading. When you look at charts and you find that, okay, this is a good technical level to buy, etc., just double-click and get your order through. You even have keyboard commands, so you don't have to toggle around with different tabs, different icons here and there. You can, let's say, customize your own shortcut key that Control-I equals to adding on a specific indicator. That can be done as well. And then what we have is, excitingly, you have different panels of your choice that you can customize your own layout. Let's say panels such as market depth, time and sales, streamer, etc. All of them can be so-called synced together with a single click. And when you go to Yang Zijiang, for example, all of them will be based on Yang Zijiang's data. And we switch to DBS, by the next click, all of the panels will also switch to DBS data. So that's how powerful it is. We have professional features that are exclusive to CIMB Securities. What we have, such as Order Injector, which I will illustrate very shortly, Streamer, and also Strategy Builder for algorithm trading. So Order Injector is how it looks like. A single click gets you right in the market in place, wherever you want. Right click withdraws the order. So let's say if you're, let's say, a proprietary trader, and you want to place order in fast, and you do not want to just key in how many units, how many, dollars, etc. Just left click, orders goes in. Right click, orders taken out. That's how fast it can get. And this is further enhanced with the co-location service with SGX. You can even place basket orders. So let's say if you have a group of orders that you want to place in on a daily basis. Today you place in, it doesn't get hit. You want to do the same again for the same set tomorrow. But most troublesomely is that most of the time we need to re-key in all the orders again, over and over again on a daily basis, as long as you don't get it hit. But here, you can save it under a file, and you can just load the file to trigger off on a daily basis till the day that you're satisfied that your orders are all taken. And then, of course, what we have is the customizable shortcuts in terms of your keyboard commands. So these are just some illustrations to make it efficient for you and convenient. Okay. Be empowered and rewarded trading with CIMB Securities over here. What we believe in is to reward clients as best as possible. That's why we invested heavily in this sophisticated trading platform. So much so, after receiving feedback from you guys to say that there are some things that you want it to happen, there are some things that you want it to be corrected, and we officially did it for you. So what we have over here is powerful trading platform with advanced trading facilities. You can also have access to our award-winning CIMB Securities research team reports, as long as you're our client. And then you can also enjoy our free education coursework, such as technical analysis, fundamental analysis, and also trading strategies, exclusive for clients as well. We also have attractive e-rewards program, and then not to say that we leave you guys alone after you have the platform. We have continuous service provided to you. If you need a platform tutorial, even on a one-on-one basis or even a seminar basis, just approach us. We have exclusive help desk to serve you better. Okay, before we end off, just let me do a quick demonstration on the system for you. So just bear with me because I'm using the doggle over here. Okay, sorry, because the layout that I've saved under my laptop so happened that it get distorted because of this projection over here. But what I'm going to show you just now is that we can actually have numerous layouts saved. So if you have many preferences or even your template on your charting, you can actually load them easily from here. And then even on this chart, shortcut commands can even put in place. Just want to show you that we have a lot of indicators over here, some exclusive to so-called the external indicators. Okay, sorry, my apologies. There's some technical issues over here due to internet. I'm not able to get a good reception to actually run this. But it should be fine at the home because you'll be using Wi-Fi. But just to give you a quick breakdown, the two systems over here that we have, the iTrade runs on web. So you don't need to have it installed in the computer. As and when you want to trade, anywhere you are, as long as you have access to internet, you're able to log in to trade. So for the iTrade Pro, because it's packed with a lot of solid features that are quite intensive, it has to be under an installation file. So that will not be available on web. And then what we have over here is that today, as long as you open an account with us, definitely it's free of charge. We have surprise gift for you at our counter. Our booth is just outside. And then just want to share with you again that signing up as a client enjoys a lot of perks with us, such as the free education coursework and numerous seminars that we'll be holding up for you guys. And then, of course, take note of these platforms that are available in the market for subscription right now. It's not launched yet, but do speak to our colleagues outside. We can actually get you an account, and then you can start to test it ASAP. All right, thank you very much for staying back this session with me. Thank you, guys.